Hello and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan and today we are continuing our little mini-series on the primary financial statements. Last week we talked about the income statement, or also known as the profit and loss statement, and today we are going to be diving into the balance sheet. In my experience, a lot of business owners tend to ignore this financial report, but it is important for you to make sure that you are reviewing this every month because it helps you see how your boutique is hopefully getting stronger over time. So today, we're going to talk through what the balance sheet is and how to read it. So let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Most business owners are at least somewhat familiar with the income statement and how it shows your income and expenses over time. But what's the purpose of the balance sheet and why does that matter? That's exactly what we're going to be talking about today. So, the balance sheet is a financial report that shows you a snapshot of the financial health in your business. And just like an actual photo, it captures your financial information as of a specific moment or date in time. So if you remember back to last week when we talked about your income statement, it shows your numbers over a specific time period, whether it's last month, last quarter, last year. Your balance sheet is as of a specific date. So October 13th, 2025, that is the date of your balance sheet. It's going to show you your numbers as of that specific date. And a balance sheet is broken into 3 different sections. The top section is always going to be your assets. And if you remember back to episode 2 where we talked about the chart of accounts, if you need a little refresher on any of these terms, make sure you go back and listen to that episode. But the top section is your assets, and that is what you own in your business. So it's going to include things like the money in your bank accounts and your payment processors, the inventory that you have on hand, maybe any more expensive or significant display materials, computer equipment, things like that. Those are all things that you own, and those are all going to be listed as assets on your balance sheet. The next section is your liabilities, and this represents all the things that you owe in your business. So it's going to include outstanding credit card balances or loans and lines of credit that you owe. It should even represent the sales tax that you've collected from your customers that you need to pay to the appropriate state agencies. And the third section on your balance sheet is what's known as the equity section. And this represents kind of your personal stake or investment in the business. Now, the cool thing about the layout of the balance sheet, or at least I think it's something cool, is it's like one giant formula. And this formula is really one of the foundations of bookkeeping and accounting. But the reason it's called a balance sheet is because it needs to balance. The formula needs to balance. And the formula that's already built into your balance sheet is your asset section. So at the top of that first section, assets, you're going to see a line that says total assets and a dollar amount. That is your total assets. And the bottom 2 sections, your liabilities and your equities, if you add those 2 sections together, you're going to get the same number as your asset section. So the formula reads assets equals liabilities plus your equity. That is like one of the foundational formulas in the world of bookkeeping and accounting. Fortunately for you, if you use a bookkeeping software like QuickBooks Online, it will automatically always make sure that your balance sheet is in balance. But if you remember back to like junior high math, maybe you can also flip this formula. And this is how I like to explain it to my clients. So the formula in itself is assets equals liabilities plus equity, but that is the same formula as assets minus liabilities equals equity. And I like to explain it this way to my clients because it helps you understand that if you were to take all of your assets, so all the money in your bank accounts, all the inventory that you have on hand, and convert all of that to cash, which means just selling it at cost, if you were to take all of that money, pay off all of your liabilities or your debts, any loans, all the sales tax obligations, all of those things that you owe. Your equity is essentially what you would have left over, or what I like to call your walking away money. So if you were just to close up shop, take all the assets, pay off your liabilities, that's what you'd be left with. Just like with other financial reports, I love looking at balance sheets and comparing them to prior periods. So if you're using QuickBooks and you're on the balance sheet screen, you can filter for the last, maybe 12 months of date range, and you can have it display by quarter. And you can see how maybe your assets have been growing over time, or maybe your liabilities have been decreasing over time, meaning that you're paying down your debts. Ideally, you would love to see that your equity or your walking away value is growing over time. But these are the different numbers that will help you measure the strength and the health of your business beyond just what your sales numbers say on your P&L. The balance sheet is also going to be really important if you ever want to apply for a business loan or attract investors, because they want to see this snapshot of your business and they want to make sure that your business is strong enough to support if you take on more debts. They want to be able to see that you will have the ability to pay that back over time. So that is a brief rundown of what the balance sheet is and how to read and understand it and why it's important. If you are interested in learning more about the balance sheet and seeing a real-life example of how this looks for a retail boutique business, then I would love to have you register and join my free masterclass called Make Your Money Make Sense, where we will actually look at all three of these financial reports and see real numbers and how they all fit together and what the big picture is that these reports can tell about your business. So I would love to have you join. You can go ahead and register at findingfreedomfinancial.com/masterclass. I will also link it below in the show notes, but I would love to have you join to see these reports all in action. That is all that I have for you today. Be sure to tune in next week for another episode of the Boutique Bookkeeper Show as we look at the third primary financial report. So I will see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.